Okay, everyone, welcome to another weekend market wrap up where we're going to just take a look at what happened this week in the markets, crypto, FX, stock market, individual equities, everything that we think is important. As always, too, for people who are Stats Edge Pro members, what I'm going to do after this is run all of the systems that we have. So those 30 algorithmically curated stock picks will be sent out to you very soon. If you're interested in that, you're interested in our Discord room, where again, as in real time, as these things are hitting, you will be alerted. Make sure you go to statsedgetrading.com. You check out the Stats Edge Pro section there. Every single month of the back test of all of the algorithms, I just updated it today from the end of 2024 all the way to the beginning of the year 2000 on a month-to-month basis is there. So you can see the percentage equity returns of all of the different systems. And then what happens if you combine those systems, which is the kind of the goal is to always have these systems combined. So without further ado, start here. We're going to start with Bitcoin, which is still just chopping around. Right? Pulled back a little bit today. Pretty nice reversal, right? Let's take this line, just push it down here. We were back at this support now a couple times. Nice little bounce today. We were looking a little worrisome yesterday as we were hitting this zone, but a nice strong day. And what's interesting about this being so strong is that we have the cues and a lot of equity markets that were selling off a little bit. So to see Bitcoin being strong, that's a good thing. And I always say to people who do not care about crypto, if you think it's a scam or whatever, you have no interest at all in crypto, you should still watch it. And the reason is because it is without a doubt a speculative asset and is without a doubt a risk on asset. People are not aggressively buying Bitcoin if they're worried about their jobs and the state of the economy and all of this stuff. It's a very risk on type asset. At least for now, it plays that role with a 3% move today, kind of showing that we're looking up. Ethereum is also hanging out at a zone like this, not quite the oomph in the bounce that we had in Bitcoin, but that's been very common in Ethereum. Ethereum has been relatively weak to the overall market, or the overall market being Bitcoin, for a very long time here. Solana is the same way. It looks like very much a flight here to the king, the big guy doing well. Everything else has been lagging a little bit. Traditional currencies, we have the dollar. If we go to a weekly chart here, just continuing to go, right? Broke this area, 1 week of a pullback, and now 6, 7 weeks up in a row in the dollar. This high right here is the prior high from our 2022, where the dollar just was going nuts. There, I was always saying, hey, who needs AMC and GME when the dollar's just going up day after day? Looks like we're there now. We'll see what happens when we hit this top right here. Gold breaking out of this little zone. We've been talking about this zone here for a few months now, where this has just been pulled back after the election, has been consolidating very, very tight. Looks like it's breaking out this week. So gold and even silver is catching up here. So both of these, I think, are on watch next week for a little bit of a strong move. Now, one thing that's interesting is because we're getting this push up in the US dollar yen. Remember, back here, this is where the Japanese bank said enough. We are going to protect our currency, because you take this and you flip it, right? So as it's going higher, the yen is just getting devalued. There was a time where they said enough is enough. We are going to try to intervene and to try to prop up our currency. That worked for just a little bit, and now we've been grinding back higher. So I would not really be buying too much US yen here, because if the Bank of Japan comes back and says, okay, we're defending this zone, just like we told you guys, you could have a potential another leg down here as well. Individual markets, I've been talking about this for a long time. We have 50 minutes left in the day. Really what I'm looking for is, I've marked it right here, is this 580 bottom. We undercut it a little bit, and now we are rallying. So if we can hold above this at the end of the day for the next 40 minutes or so, this is going to be another successful touch. Now, the reason that this is important to me is because after FOMC, when we had this big flush down, 580 is where we held. We had a nice little bounce, came back to 580 again, and then bounced again. So this zone, not necessarily 580 on the nose, not saying 580, I love it. 579, it's awful. Just means this kind of zone is probably a better way to draw it. this gap in here, this island that was down here for this island reversal. This was after, I believe, all that the Japanese yen craziness, the yen unwind. This zone is very important. We have to dig in and hold into this zone, which I'm just using 580 as kind of a proxy. As long as we hold that, I want to be buying stocks, and I have been buying stocks pretty aggressively. It's been kind of a rough month for some of the trend following algorithms, but the mean reversion algorithms, some of the pullback algorithms have been absolutely amazing. So a nice pullback holding this zone for now. We need to see what happens going into next week. If we can hold this zone and push higher, then this will just look like an overall dip that should have been bought. If we start to break under this zone, then now we have a bit of a trend violation. We're no longer in this primary uptrend. It could be a lot of chop as well as the other thing I wanted to mention. Just because we stop going up doesn't mean we need to start going down. Those two things, right? Especially for new traders, they think the market goes up or it goes down. Well, it goes up or it goes down or it just goes sideways. And I think Bitcoin's always the best chart to kind of denote this. Look at this action in here. Wasn't going up, wasn't going down, was going sideways, right? Here as well for a long time. We can just chop around. There's nothing wrong with that. That's just part of markets. It's part of trading. Chopping is a thing. So we need to make sure if that's going to occur. That's why I do over what I do at Stats Edge Pro, right? If we take a look at this combined algorithm that goes back to the year 2000, this is made up of all of these different ones. We have a trend continuation, we have a pullback, we have a monthly rotation, we have a mean reversion setup. And the reason that I trade all of these different systems is because, for example, if the market is going to chop around for, say, all of 2023, trend following is going to be rough. Trend following is not going to do too well. However, mean reversion, pullback trading, these things hopefully should kind of outperform. I wanted to talk about oil here. Let's go to this chart. I have it marked up a little better. Uh, Oil breaking out really, really strongly. So we have this nice wedge. This has been going on for almost 2 years now, this wedge. Massive breakout in oil. Also, UNG, which if you guys missed it, make sure you're subscribed or following wherever it is. I kind of sent out my thoughts on natural gas right in this area, right in 17 bucks, talking about how I bought a fair amount of it. And a nice push up here. But I just want to show this is energy as well. Uranium, URA, down a little bit. But if we go like XLE, a little bit of reversal, but turn that off. There we go. But was up quite a bit earlier. So XOP, which is oil services, OIH, which is another oil one as well. A lot of these oil names and natural gas and things like that have really been digging in. If we go to our dashboard here, let's open up this one. These are most of the ETFs that I watch, and we can see pretty much themes here. Let me get out of the way a little bit. So USO, natural gas, oil, DBC is a commodity sector. We have XLE down here as well. Silver, gold, and then again, XOP is oil services and projects. Corn, a lot of things out here that are very much focus on natural gas and focus on oil and focus on energy. This big red section down here, down at the bottom, we have K-Web, software, right? Semiconductors. It looks like a bit of a flippening from tech to commodities. If that's going to be the case, that's what we have to keep an eye on. So that's what I'm going to be focused on going forward. So kind of my discretionary play for this week is to look at these oil names and just to see if I can find an oil name under the hood that looks like it's breaking out here as well, something that will benefit off the movement and the price of oil. If that's going to happen, then that's going to be a trade that I'm going to look to take. That's what we're seeing. And it's important. I want to do just a little rant to end us here. A lot of people, for some reason, come into the market and they'll say things like, I trade, big cap growth tech stocks, or I trade, I trade micro cap stocks, or I trade this, or I trade that. And for some reason, they identify themselves as a trader of a certain instrument. I've heard that a lot, and people have messaged me personally and said, hey, you're talking about this oil move, you're talking about some of these more boring type stocks move. But I'm someone who I trade, again, usually it's like growth or microcaps or biotechs or something. And I just want to say that's fine to focus on something if that's what you want to do. You just need to understand there's going to be periods of time where that's going to suck, right? Just like I talked about with these multi strategies that I run. The reason is that not all strategies work all the time. So I run a whole bunch of strategies, hoping that one is always working and making up for the ones that aren't or the ones that are in cash. The same thing goes through with these people who are, I trade, these exciting growth names, or I trade these other names as well. That doesn't make any sense. You want to try to develop strategies that will trade different assets when they're hot. So if oil is doing very good, then you want to be focused on that. It might not be as interesting. You buy Nvidia and it goes up 100%. You buy an oil stock and it goes up 10%. That's fine. It's what the market's going to give you. Sometimes the market's going to give you great opportunities in awesome moving names. Sometimes the market's going to give you opportunities in names that don't move as much. Again, it's just important to make sure that you're not laser focused on that thing that's not moving when you're missing the thing that is moving, even if it's not moving that much for you. So again, just have strategies, diversify those strategies, and diversify the assets that you're willing to play with those strategies, just to make sure that you're always in something that is moving, so that you're avoiding getting chopped up in times like this, where I think going forward we may have this choppy market when it comes to the S&P 500, because as some things are selling off, some other things are pushing up, and again, just the way the indexes work, that creates kind of a choppy environment. So again, if you're a Stats Edge Pro member, it will be Sunday when I have out that information for you. So make sure you stay tuned to your emails. I thank you all for coming by, and until I talk to you guys next week, get away from the screens.